comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a giga-transaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Hi, everyone. Thanks again for tuning in to another episode of Final Settlement. It's Monday, April 14th. We had an awesome conversation with Brian Cabellis and Liam Nelson discussing all things happening in Bitcoin, digital assets, and the regulatory front, along with the investment opportunities in the space and where to look at the signal through the noise. It was a lively conversation between Brian and myself and Liam, but Brian and myself in particular when it comes to Bitcoin dominance and where we see altcoins and Bitcoin playing long term. After taking a listen, let me know what you think or let us know in the comments. And as always, you can always shoot us a DM or hit us at lo@onrampbitcoin.com. Now, on to a little bit about Onramp. There's a lot of questions that have come up in this space about, can I work with Onramp? Do they serve me? Is it just for institutions? And I want to clear a little bit of that up. And we'll do that, heading into other podcasts as well. So at its core, custody is evolving. Individuals have held Bitcoin for the past 15 years, or call it 12 to 15 years, in almost the exact same way. They generally held it in self-custody on these little hardware devices, or they ultimately have to leave it on a third-party custodian. That's ultimately what's left the asset class from being a small niche asset, still growing faster than anything else at $2 trillion. But ultimately, custody has to evolve with it. We have sovereigns coming into the space. We have Larry Fink talking about it displacing the US dollar. And the reality is Onramp's leading the way with Bitcoin custody evolving as well with multi-institution custody. How does it work? Well, instead of one institution having to manage all of your assets, and we all know not your keys, not your coins, the other side of that ends up with complex management of private keys. Onramp secures that Bitcoin in is a multi-institution vault. It leverages multi-sig. It's all segregated on-chain. But here's the kicker that most people don't know about. We mix technical governance, which is i.e. multi-sig, with legal governance. So when you onboard via our unified experience, what used to take me and my previous firm anywhere between 2 to 8 weeks to get you onboarded to multi-sig takes 2 to 8 minutes. You can try via our self-onboarding flow, or you can reach out and schedule a consultation with us, and we'll happily walk you through that. Now, what's important is no single custodian can move those assets. It requires you directly to video verify with multiple institutions via, again, a unified experience, so you're not having to go all over the place. And the kicker on top of that is about 2 weeks ago, we announced a $100 million policy via Lloyd's of London Insurance. Now, the key component to all of this is you retain transparency and control, so your assets are always there. And then beyond custody, we offer a comprehensive suite of Bitcoin financial services for today and then the future. So if you want to lend against your asset because you don't want to pay cap gains or need exposure to dollars for that diamond ring for your girlfriend turn into wife, or just need home improvements, we can offer that, as well as deep trading liquidity if you need to buy or sell Bitcoin, inheritance planning baked into the solution, IRAs, and much more. Think about Onramp as your private banking-like partner. We coordinate key holder activity. We remove all the technical burdens from you or your loved ones, and we provide a personalized, trust minimized experience tailored to your specific wealth preservation goals. Now, again, most individuals will think it's all or nothing with Onramp. We recently put out a post you can see on our website here, which is the barbell approach to custody. If you're interested in learning more about that, you can read a little bit about how you can retain some of the sovereignty as well as still have access to multi-institution custody. Whether you need a Bitcoin or an experienced holder, Onramp helps secure generational wealth and unmatched security and peace of mind. Visit onrampbitcoin.com to learn more, sign up, or book a free consultation with our team, and we'd love to speak with you. Now, I hope you enjoy the show.
All righty, gentlemen. Welcome back to Final Settlement. Today is Monday morning, April 14th, 2025. Not a whole lot going on in the world these days, boys, since we last spoke. We've seen a lot of volatility. I will say Lots of news headlines, lots of fake news headlines, all contributing to various sorts of volatility across markets. But gentlemen, how are we doing today?
We're good. Are we back with, is this the highest signal show in all of Bitcoin when it comes to like what is actually happening in capital markets and where Bitcoin intersects?
It might be. That's the goal.
We were just talking about it. We were talking about like there's obviously a lot of cool stuff happening, across Bitcoin with the bit bonds and infusing Bitcoin across capital stacks, custody, insurance. But there's also a lot happening on the licensing regulatory front when it comes to stables, the Genius Act, some of the other things that are just happening across the industry where there's some signal that I think we kind of forget in the Bitcoin space that we have to pay attention to because it ultimately reverts to Bitcoin, but there's a long way between now and then. So that's the aim. Let's bring the signal every week. It's going to be a good one. I know Liam's excited about.
We'll bring the noise too. We'll sift through the noise for our audience because there's a lot of that out there as well.
We might bring some noise. We
could bring some noise.
You can't bat 100. You cannot bat 100. So we will have some bad takes, but that's what makes it good. Brian has some takes that trending. Bitcoin dominance will trend up and to the right forever, and
been right so far.
He fails to miss that all this crypto stuff is going to have to be built somewhere. These stables are going to have to run somewhere. Security tokens are going to have to be built on something, and there's going to be narratives that are spun up. They're going to take a lot of people's Bitcoin from them. But ultimately, Bitcoin's dominance will end up at 100%. It's just on what time horizon?
I mean,
that much we agree on.
And the real Bitcoin dominance is not Bitcoin versus the other crypto assets. It's Bitcoin dominance versus every asset in the world.
Exactly.
And it's doing well so far.
We've got room to run on that one, on that metric for sure.
Liam,
where do we want to start? I know we have a big list. Where are we?
Thought we'd start with Binance. So the CZ obviously got funding, he's out of Binance right now, but Binance got a major $2 billion funding from MGX a couple months back. There was a talk about Binance working with the Trump family crypto venture and meeting with at that time, he denied it, but the account has come out again. He actually met with the Treasury Department and discussed loosening U.S. government oversight on Binance, as well as discussing a deal with the Trump family crypto venture. I thought this was very notable just because, one, there are many different nations out there that are looking to get Bitcoin and crypto exposure, but don't necessarily know the best way to do it. But there's a lot of money to be made. And I think by bringing in people in the know, both MGX, some essentially view into the Abu Dhabi investment landscape, as well as here in the US, both are looking to drive the strongest returns and just get exposure to Binance as well as digital assets as a whole. So wanted to get your view onto, this deal and what's going on here.
I'll let Mike start.
I think I don't have any there feels like there's a lot happening here. One is I think we forget that Binance really is, at least at the current level, we think of Coinbase as the darling, but it really is Binance when you think about creating the true altcoin casino and everything that exists around it. Coinbase was, probably tried to be that. Balaji, joined as CTO, and that was the kind of, I think they only offered like 5 to 10 cryptos until he came, and they really wanted to do all of that game. But the reality is the SEC and the regulatory climate didn't allow them to do it, and Binance really just was. I think the numbers overweight from trading pair and flows. So CZ, one of the richest individuals, super smart, savvy. I think there's something interesting in the sense of Abu Dhabi getting investment into and insights into what they built for themselves from that part of the world. And then also Trump recognizing that, I don't know whether it's from a sovereign perspective or from their, family balance sheet and them getting exposure, that they want insights into like what they're doing, because I think there's just the first inning what CZ and Binance built into this whole like casino of trading all this crap. But then there's another aspect that I haven't fully baked out, just throwing out there with, if we think about, there was a lot that happened with SBF and FTX And CZ ultimately popped that bubble, and that bubble, some will make the case, was not organically built, that it was built with a bunch of things that everyone called or could have seen that FTX and SBF were, a little bit nefarious at worst, but at best they were like, they never had, people watched them and it never felt right, but nobody said anything. And they brought in a lot of politicians and capital, and ultimately there was a deleveraging that happened that brought on a lot of regulation and a lot of things that happened post that have ushered in what's happening today. And Binance was in the middle of that, and CZ was in the middle of that. And so the question is kind of weird in either, because part of this article, Liam, is that he's doing a deal and he's giving up like Justin Sun from Tron, and he's giving up a bunch of trade secrets. And it feels like two things are happening. Either one is he brought down the last market, got slapped on the wrist, and has a bunch of trade secrets, and he wants to make money. He's an opportunist, so he's like doing something. Or there's the other angle where he was part of the deleveraging, and this was all part of the whole charade. It's like, hey, you're going to be the patsy, you get some money, you're going away for 6 months into a nice little deal wherever he's at. You're going to come out and you're going to, own the world effectively. It's just going to be within guardrails. You can't be a pirate forever. I think we just forget that 2022 feels so long ago, but he was instrumental in the whole thing on the run up and then the way out. And now he's come back full center from like a global standpoint, from the Middle East to GCC, now to the West. Anyway,
yeah. I would lean the former of those two sort of trajectories, just in the sense that in 2022, like, he didn't know Trump was going to win. He didn't know that the atmosphere and the environment in the U.S. was going to change. So, to me, the broader takeaway and signal from all of this is like, one, it's knowledge seeking on behalf of the Trump administration. They want to, know what CZ knows. He's built one of the biggest businesses, if not the biggest crypto business in history. And then at the same time, I think it is a signal around, what the admin has also been talking about around, like, we are going to stop what was happening for the past 4 years around choke point and basically just, maligning this industry. Because if you, rewind before FTX even existed, like, Binance was kind of the like unscrupulous player in the minds of the United States. They didn't really, I think they tried to launch Binance US, didn't really work. And so they were always the massive sort of offshore maligned player. And so to me, this is just a massive signal of like, no, we're open for business here in the U.S. for any and all crypto companies. And this is like, connecting yourself to CZ in some way is like a strong signal of that, of like, we're here to partner with and gain knowledge from people who have built legitimate things in this space. And really, we want that innovation to come here. We don't want it to remain offshore or be scared to operate in the United States. So to me, that was the broader takeaway. Sort of details of this deal aside, it's more of like a signaling thing in my mind. That's kind of what I thought.
Yeah, I mean, one other last point too is it's the Trump family is obviously getting into Bitcoin in a big way, but you really want to get close to where the money is and have some sort of visibility into what's happening there. I mean, the U.S. essentially governs all of the banking, and the Trump family obviously needs to be close to the movement of money within crypto too. And so by just one, having the inside knowledge and being able to get into rooms with everybody that understands where the money is moving is going to be helpful, as well as if anything kind of is happening that they don't necessarily like or support, they're going to be able to get in that room and be able to speak with them pretty immediately about what's going on here and how can we kind of shift the window here. So I think it's definitely interesting that more and more people are paying attention in a significantly larger way.
What's next? What's next on the list?
Next, we have Visa is joining the Paxos, Robinhood, and Stablecoin Consortium. So Paxos Global Dollar Network, which includes Kraken, Galaxy Digital, Anchorage Digital, Bullish, which owns CoinDesk, and Nuvei, they essentially, I can turn it over to Mike a little bit here, who's our local stablecoin maxi. But essentially, what's happening here is there is a essentially buying group of number of different firms that don't necessarily have exposure to this industry that are coming in and trying to necessarily compete with both Tether and USDC. So can turn it over to you, Mike, to get your thoughts here.
Yeah, I think there's a few overarching thoughts. One, I think directionally is Stripe, for being as big of a firm as it is, processes like 1% of all B2B transactions, right? And so like nobody's really built anything just for efficient use of capital flows. So that's like an obvious big use case for stables. But then the other one is just the net interest margin play. So it makes me, when I think of stables, I just think of now anybody can become a bank, effectively, a digital cyber bank, because you can spin up based on your brand. And whether it's you doing it, I believe part of the Genius Act is going to have the ability for non-bank issuers of stables. So they'll have certain capital requirements and regulatory requirements, but you won't necessarily have to be a financial institution or a bank. So think Google, Amazon, Facebook, Apple. So that's interesting. There's the other aspect where anyone else, let's just say they don't have the technological requirements, even though it's not much, a lot of it's open source. You could just white label like a Circle or some other, and then, generate and split some of the fees and use their tooling. But it's all bullish for Bitcoin in particular, because that's how we've seen the precedent that Tether and Bitcoin from a global perspective was the trading pair. It just allows the digitization of a dollar and then to get in and out of BTC. So I think it's super fascinating. I think the other part that it's going to tie into it, just like how Tether tied into crypto, is like security token offering and all the stuff that's going to be built on the blockchain. It's just going to let people also get access to all of that. And so I think there's two sides to it. And the last part is the consortium play. I think that everyone's just trying to figure out their model, right? You want to get involved in the create redeems. You want to get involved in like efficient management of like merchant interchange fees, along with like how do you build the largest moat. We saw this back in, I think it was 19 with Libra. I feel like some of these players you just referenced were part of that initial consortium trying to figure that out. So there's a lot of things happening here, and it just feels like, again, I think it was the Alex Stern quote we quoted 2 weeks ago. Everyone's talking about SEC versus CFTC when it comes to like the market structure framework. And while that's important, it's really going to be this like stables bill that's going to just open up capital flows globally and change kind of banking as we know it.
Yeah, I think that's right. I mean, I think it's the main reason for that. I think it's easier to wrap their arms around. Like from a government perspective, it's like, okay, we're gonna enable stables, this digitization of the dollar, allow us to spread dollar dominance. Like it's an easier pitch, I would say, to Congress or whoever needs to pass this bill, as opposed to like more of a crypto market structure type legislation. I think this is just kind of a layup for them in some sense, where it's very easy to get sort of bipartisan support for this kind of thing. Question for you guys is, which I didn't understand from this, is like, what is the purpose of the consortium? Would they be creating a single stablecoin as like a combined unit, or is it like everyone's going to issue their own stable and we're going to have Starbucks USD coin, Amazon USD coin? Because that's what I struggle with that. It's like, well, why do you need thousands of different stablecoins?
I think they're coming together to issue one, just because that's going to drive better liquidity. And I think that's ultimately what really drives a lot of the usage of these assets. When you look at the crypto market as a whole, what you've seen in terms of demand for payment innovation is mostly just like, Bitcoin, where there is a large market cap and it's fairly liquid, and everybody wants to save in that. And then there's also the US dollar, which has a really large market cap, and everybody uses it in the US for, almost daily. And, you need to have liquid markets behind it if you're going to want to transact in it, because otherwise there's no narrative that would make anybody want to store value in it. And so Yeah, exactly. Transacting between 15 different branded stablecoins on a daily basis is going to make no sense. And so I think rather than, going after and trying to be a mid-market financial institution who is competing directly with Tether or Circle, who already have, a head start and gain some market share, I think that they need to come together to work together, and that way they can both, find other financial partners.
Mm-hmm.
Yeah, I think there's another aspect of it is that makes sense, and also just on economies of scale, because I wasn't sure, but yeah, the global dollar network, the USDG, was initially stood up, and I think you maybe mentioned this, Liam, but there was like Galaxy and Anchorage were a big part of it. That's set, and I think there's the distribution is one big component around like creation. So you need different, Visa obviously is a large distribution network, but then around economies of scale from whether it's interest, treasury buying, or whatever else you're going to be able to get from like having that corner of the market. So like Circle has its dominance, Tether, and I think everyone's trying to place their bets. Like obviously Fidelity coming in is another big one. So I think that there's just different theses around how can you actually get scale, find it. I think that goes back to the contextualizing that if Stripe, as large of a company as it is, only has 1% of B2B payments, that the market opportunity is insanely large. And so there's probably going to be a lot of different use cases or different segments of the market that will be available or up for grabs.
Agreed. Next on the list, we're focusing on some crypto assets. So right now we have Janover, who skyrockets like 1,000% after they completed their first Solana purchase. So they bought 4.6 million worth of Solana, and they announced a private convertible note and warrants with plans to acquire Solana. So it sounds like they're doing the
Solana strategic reserve.
or the MicroStrategy playbook on Solana. Thought I'd get your thoughts here on the strategy here, how it will go. What are your initial reactions here?
It's kind of hilarious, but very reminiscent of 2017. What was that? The name of that company was like blockchain ice. Like they just added blockchain to the name. It was like some iced tea company in Long Island or something.
Arizona. Is it Arizona iced tea? Or
it wasn't Arizona. It was like
some Long Island. Yeah.
It was some random like iced tea company, and they're just like, all right, blockchain iced tea, and it skyrocketed 1,000%. So that's what this looks like to me. Again, like, I mean, I also just question of like, who's driving this? Like, I've never heard of this company, but I would imagine if I had to guess, the people that were driving this decision have massive Solana bags, and like, they have that inherent bias of, yeah, we're going to stack Solana on our company balance sheet to behoove our personal bags. That would be my guess.
No, you're exactly right, because I didn't go deep there, but they were backed by Arrington and a few others. And the first thing that came to mind was, because I don't even know if it might even be there, and it wasn't on the first headline, but multi-coin. Because if I was, going to run an altcoin fund, you would go to a friend or a friend of a friend that, has involvement. And then you effectively are saying, hey, put this on your balance sheet. We'll give you X amount. We'll give you some equity in the fund, whatever it is, make this announcement. So my CZ take wasn't the most well thought out, but this ties back to it in the sense that, sure, CZ didn't know that Trump was going to take office, but there's just a reality of this is a longer conversation around the market blow up or the market growth in 21 and 2, and then the deleveraging. There was something very odd around it with the amount of capital destroyed and also the amount of regulation that just perfectly came in right after. And so with that in mind, CZ was very big. I think Binance becomes 10 to 100x bigger. And the reason why is because of this. So the problem with all this crypto stuff, and it's sad, and it's why we focus here for investors, and then also an on-ramp from private clients and being stewards of individuals' wealth, is ultimately, we all know the end state is Bitcoin dominance, appreciation story. But from here to there is so much nuance and capital going to be lost. And so peeling that back is, okay, so corporate treasuries put other cryptos on their balance sheet. They trade like, altcoins. There's one aspect. Other aspect is all these firms now can create stables. So now you have it in your wallet application where you can just go back into whatever this ticker is that looks like an altcoin. You're trading that. You take it a step further, and now you're going to let people lend against this and stake these assets and do all this stuff. And like on the margins, I could see how there's some reason for an efficiency with like registered agents with private placements and how you have to transfer controls, and like why a public blockchain could be used, even though it all has to go back to a central source of record. I could see like small efficiencies on there. Or that's at least a story that'll be told to the market and then that's how you just build this like Ponzi on top. And then ultimately the signal will be found and people will move out of some of their gains or losses into BTC and we'll end up there. But this is like this notion of 17 ICO crisis or ICO. I feel like the next wave is going to be ICOs mixed with the leverage of all of the lending that happened with 3AC. And the next 2 or 3 years are going to be longer bull cycle, but a lot of just like carnage outside of that. Because most people have never seen any of that are going to come into this space.
Yeah, it's go ahead, Liam.
No, I was going to say I'm on Brian's team that Bitcoin dominance is going higher relative to other crypto assets. You're going to see a lot of these other crypto assets try to, and I think Janover was the first one that is trying to implement the Sailor strategy playbook, but with another blockchain and trying to, essentially drive more volatility, which should then drive the ability to issue more shares to acquire the underlying asset at an accretive rate. But if the underlying asset doesn't necessarily have the same value accrual narrative as Bitcoin, then it's just built on an unsound foundation, which I think is, how many of these companies are evaluating their strategies here moving forward.
Yeah, that's well said.
Yeah, it takes into account the thing we talk about this internally when we market at Onramp is we take into account like everyone just knows what we know, and it's just not the case. And so like there's a reason why there's things floating around across people's inbox to invest in treasury companies all over the world, and they're like oversubscribed, and they say like fill this out and it's limited, but they're not. Those people aren't buying Bitcoin.
Yeah.
Right. So you have the thing with counterparty risk. So it's just like all that makes sense on a long enough time horizon, but between now and then, it's just Yeah.
No, I mean, you're right. Part of it is just human nature and greed and a lack of understanding of Bitcoin specifically, and saying, even if the own individual's personal goal is to acquire more Bitcoin in the future, they may take higher risk bets on all this other shit in order to accomplish that. And the reality is most people don't have that foresight of that's their actual plan. And it's more just human nature and greed of thinking if you're early to something, then it could be accretive, which there is evidence to support that in the broader crypto space, generally speaking, because the whole sort of VC crypto landscape has been this remarkably efficient vessel to pump and dump and basically sell on retail's heads after you've made your gains. Like that didn't exist prior to crypto, right? Like there was longer vesting schedules. It was more difficult to get out of equity positions. If you have a liquid token, it's much easier to profit on a completely bogus idea that then 6 months later you're selling to retail as the next big thing. So I think that has also driven a lot of this mentality, is like to some extent in short time frames and for certain entities, i.e. VC firms, it has been a creative strategy to do all this shit.
And you just made the case for exactly why dominance won't in the short term go up, because that means that just humans are going to change their nature, because how are they going to jump from that to like, I'm just going to store my wealth in something that only has a, small, you see what I'm saying? Like a lower time preference. Everyone's just going to jump to it. Like they're going to go to the thing, touch the stove at the grandest scale, because it's also going to be pushed to them by every brokerage and every firm. That's the idea.
Yeah, we'll see. Part of my argument on the dominance thing is like the narratives, the crypto narratives this time around have less direct value accrual to the largest tokens. And in order to compete with Bitcoin on a dominant scale, it needs to be like the next 9 below it that are competing with it. Like if you have small little shitcoins that are like going from 0 to 100 million, like that's not making a dent in Bitcoin dominance. So you would need like the Ethereums, Solanas of the world to actually be capturing value accrual from things like stables and real world assets, which is where I sort of doubt that direct linkage.
Yeah. Well, all these stuff have to be built on those blockchains. So that's why the value accrual, because the narrative would stem from it.
Yeah, but that's not, it's not in actuality how these tokens work. Like if a lot more people use Ethereum, like the Ethereum price doesn't automatically go up. It's not a direct relationship. There's not value accrual there necessarily.
Yeah, but I would say that it actually, the more people that use Ethereum, the more it goes up, not because of the mechanics. It's because the more awareness that it's using. It's the same way like Solana and the tooling and like the different applications they have are able to fund more. It's like the more companies building on it, it's actually this. So the more companies that build on Solana or Ethereum or whatever means that they have larger marketing budgets, which you can effectively throw these different conferences and go and do deals with X firm, and then they further perpetuate that notion of value being delivered. It has nothing to do with the underlying economics. It just has to do with more people using and building around it.
Yeah,
i.e. Ripple.
Right, but I think the person, the individual, or the entity that is now diligencing that linkage is different than prior cycles. Would be part of my argument as well. Like it's not just a retail crowd that's buying into every narrative. There's hopefully, and maybe this is just too optimistic on my part, that there would be some amount of critical thinking and diligence to understand that if a bunch of stables and real world assets get built on Solana or Ethereum, like it doesn't necessarily mean Solana and Ethereum go up in price.
Yeah, this is going to be a fun one. I hear the argument. This is going to be a fun one, like for us to have ongoing. And if anybody's listening in the comments wants to share where they think dominance, but it kind of resembles a little bit. We could talk about it in a different show, but like Bitcoin venture capital, where the notion is like from an unsophisticated angle, it's like, oh, early stage tech. I want to get into like early Lightning, Fetty, mints, and all this stuff. But the reality is there's like no use case for that for probably the next 3 to 5 years from a commercialization perspective. And so somebody will come in saying, oh, I get in early. Like there could be like a small chance where if you got in early and then because you fall forward, somebody may acquire it from like a banking perspective or you want the team. But the reality is there's not really a lot of fundamentals. It's almost like a trade. That's like an angle of this. Like there's some money to be made too from the crypto stuff, but ultimately you become a trader. And like that's how people think as well when it comes to like equities.
Right.
So
we shall see.
We shall see.
Do we want to transition to the transition to the TVP report, or where were you going, Liam?
Yeah, I was just. I don't want to talk too much about the crypto space too, but there's one last one that is worth mentioning, which is OM. It's a real world asset that
So I hadn't heard of this prior to this weekend, but apparently, this was like one of the darlings of the real world asset crypto space. It's called Mantra. I think it runs on Cosmos, which is some blockchain. More of the story is market cap of like 6 billion goes down 90% in like 30 minutes. Now there's allegations around the insiders held 90% of the supply. And so some of those coins started moving over the weekend. People got a little anxious about that. And then it started sort of just a cascade of selling once those coins started moving. I think the team has come out and denied it, but it seems fairly cut and dry given that they controlled a massive amount of the supply. And so this just goes to show, I think, a broader theme that we've talked about and we'll touch on with this TVP report that I mentioned. But basically, there's been so much venture focus and funding on the crypto space. And part of the reason for that is that dynamic that I referenced around just it being an effective vessel for pumping and dumping things that have no actual intrinsic value. And so the result of that is you see things like this get funded. And just a week ago, they announced $100 million raise from like some pretty notable names, like Brevin Howard's on that list, DeMac, a couple others that are like legitimate institutions funding this $100 million round that then gets, exit pulled, scam pulled on the weekend. It's just like, this is how capital is destroyed, as you're referencing, Michael. It's like there's poor incentives, first and foremost, to allow this money to flow to these terrible ideas. And then there's no real accountability because, this is one investment in a portfolio of many, and you hope that one does 1,000x, and you don't really care if one of them was exit scammed, as long as you can, tell a story to your investors about it. But, it's just, we've seen this many times before, but this was a pretty large one. So I thought it was worth raising. Like $6 billion just evaporated overnight.
Yeah, I mean, this is why I keep harping on it. It's not to be annoying about the like dominant stuff, but it's just, I feel it every day when we talk to people at the largest institutions on what we do around multi-institution, why they would want to participate in long term, how this will work. And they can't wrap their head around like crypto versus digital assets to assume that like they go to that. And DMAC is one of them because, I mean, I'm not under NDA or anything, but I spoke with them. They're an Emirati-based real estate firm, huge. And they were interested in like crypto for payments when we talked. It was like meant to be a call about Bitcoin. I don't even know if it was about balance sheet or thinking about it from an investment perspective. This was over a year ago. But we saw this already play out with the pensions and different institutions in the US that there's just a world looking for yield, and a yield meaning something over the real rate of inflation in the S&P 500, right? That's like what alternatives effectively are. I was talking to somebody about this that's in the space, and they're like, oh, alternatives gives accessibility and all this. Like, no, it's just getting you further on the risk curve because effectively people have not been able to hit the return benchmarks and profiles in the S&P and their bond portfolio. And so this is going to be an example of it in the same way we all agree here that we're in for some like kind of tough times from inflation. There's a nihilistic nature of, individuals not being able to, protect their wealth and all of that. So to assume that they're just going to go to the thing that saves them would be great, but it's just like not how it works. They're going to go to the thing that looks like can give them 1,000 bagger. And this is part of it. And it's why we do this. It's why we're investing. And then also from early writers investing in a Bitcoin as our hurdle rate, because ultimately that's going to anchor us to the most prudent allocation of capital to return the capital to ourselves and our investors. And so this is just, it's fun because we're at the early stages, the fringes, and there's no other place I'd rather be because ultimately when it all becomes known and understood as Bitcoin's the hurdle rate, then this will all be obvious. But we're like 10 plus years away from it. And there's gonna be a lot of money for those that get on the right side of it to be made, and then a lot of money for those on the wrong side of it to be lost.
Well said.
Speaking of money to be made and lost, TVP Trammell Venture Partners is a Bitcoin and I think they may do some crypto focused in venture firm. They came out with a 2024 report on the state of the venture capital market focused on Bitcoin. There were a couple interesting parts in here that are worth discussing. One is the number of pre-seed transactions in the market climbed by 50% in 2024. But interestingly, there was another part. The numbers weren't all universally positive, which was across all rounds as high as Series B. The total capital raised declined 22% in 2024. There are a couple other interesting nuggets in here, but those were the two that I thought were most interesting. So I was curious if you both had any opinions on, the state of the market here at the moment and looking at the Bitcoin venture capital space.
Yeah, I was going to pull up the slides. Just give me a second here. They've done this report now for 2 or 3 years. And the one slide that always catches my attention, and I think they tend to focus on a lot as well too, is what I was sort of describing earlier around just the amount of money that still goes to broader crypto as opposed to Bitcoin specifically. And I think there's a few takeaways from this. One, it's those incentives which I've referenced, but beyond that, it's related to that. And what I mean is basically, the appetite for investing in Bitcoin specific companies hasn't historically been as large as crypto because there isn't a perceived as large of a perceived ROI on Bitcoin businesses, i.e., it's pretty difficult to make money, be a profitable, long-term, sustainable business operating solely in the Bitcoin space. And so I think it's reflective of both of those dynamics. But what you can see on this chart is, basically just, despite the market cap dominance of Bitcoin, there's just a massively larger amount of both deals and dollars invested in the broader crypto space. And I think in the next slide, they show this is changing sort of slightly on the margin, like relative to last year, with higher deal count and amount of dollars to Bitcoin specific companies, but it's still, relative to the broader space, pretty de minimis. So that's the most interesting thing to me. I think it speaks to the opportunity for what we're doing in terms of, actually operating with, one, Bitcoin as a hurdle rate, but two, then searching for companies that actually have commercial viability and the ability to make money, which historically, Michael, you've talked about this, but like historically that hasn't been the case necessarily for the Bitcoin specific venture arena, if you will.
Yeah, Chris and Matt and the guys over there are good friends, and they're the oldest, if not the second or third oldest Bitcoin only venture firms. I think Stillmark might have been after them, and they've been around for a while, and this has been a big theme. It's partially why I got into the venture space was. And maybe taking a step back to contextualize what Brian said, it's $100 billion roughly from 2012 to 2024 that's been brought into the crypto space. 100 billion, right? It's an insane number. And for Bitcoin, it's more than likely less than $1 billion. You can just put directionally for easy numbers to contextualize 100x. While Bitcoin sits again at the market dominance of 65, 70%, and all these other cryptos could naturally just kind of fall out, and then you have another crypto that comes about. So it's just complete value destruction of capital. But then the other side of it, where there is again large opportunities, is ultimately, so you have this 100x, and what happens is when people, that's why you don't see a lot of Bitcoin companies even get started or funded. I think it's happening more because what has happened, and this happened to firms in the space, you look at like Ledin and Casa and firms that started as Bitcoin only, and then ultimately their VCs asked them to go further on the risk curve because it's very hard to make money in Bitcoin outside of trading fees and then custody. And custody has to look differentiated. In our thesis to make money, i.e. multi-institution, there's not a lot of capital to be made. And so back when I was building Unchained, there was a lot of investors that wanted to come in, but they would only come in if you supported Ethereum, rehypothecate collateral. So you needed somebody to have the underlying ethos and understanding of it. But that's not really just enough. If you're going to allocate capital in the space prudently, you have to also understand how to operate and what's commercially viable and what people will want to spend their money on. And so very often, even in the Bitcoin ecosystem, a lot of capital gets thrown out on ideas and things that look like traditional venture bets that could be 1,000x's. But the reality is that's not how Bitcoin's adopted, because it goes in this accelerated business waves, and you can't really just go scale up and hire a bunch of people, because that's its own form of destruction of capital. And that's what's happened the past 5 years. And so it's influenced a lot of how we build Onramp, and then how we build with our portfolio companies at Early Riders, is thinking through what are the picks and shovels infrastructure that'll be used globally, but then ultimately how to use economies of scale and build in a prudent way that can return Bitcoin. Because one of the concepts we talk about internally, and that it's going to become another main theme, is a lot of people in the fiat space, in the traditional space, will tout the number of headcount. We all know that's BS. That's already a narrative we're understanding, at least people in this kind of side of the fence. It's like number of people really is a negative, not necessarily a positive. I think that same notion, a cousin of it, will be the amount of capital raised or the amount of capital deployed, because you'll just look at your amount of capital you raise and somebody will just back test how much Bitcoin that is. And then now you have to forward look and say, well, let's say Bitcoin's only 150K. That means you have to bring back $1 billion in exits in Bitcoin at that time. People are going to look back and be like, this makes 0 sense. And the alternative is going to be how much Bitcoin could get you equity in a business. And so is it 1 Bitcoin? Is it 2 Bitcoin that gets you 10% ownership? And, so anyway, I think those are some of the themes that we'll be playing in and some of the research we do, and then stuff we talk about here.
Yeah. One other thing that I thought was really interesting too, and you kind of alluded to it, was about the number of pre-seed investments was significantly higher. And I think that is a positive, just because there are more Bitcoin only investors or Bitcoin angel investors that are just high net worth individuals that, both want to support the ecosystem, but then there's no shortage of good stories that can be told in terms of how to make money or, new tech that can be built that doesn't necessarily already exist. But there's, some commercialization questions. But it's interesting going out across like the total number of or total amount of funding being down about 50% from last year, just because, people are either intuitively or actively starting to look at Bitcoin as a hurdle rate, especially if they're angel investors, right? They don't necessarily have like a fund. They're just like considering, should I invest in this company or should I just hold the Bitcoin myself? And if the companies, either they're successful and they understand how to allocate capital, and that generally means, putting a large amount of their the capital that they fundraise into Bitcoin in order to extend their runway and need to raise less capital fewer times, i.e. like MicroStrategy at a really large level, but there are a ton of smaller early stage companies doing the same thing, or less successful companies. They may or may not put Bitcoin on their balance sheet, but they're going to be raising at a round that's lower than the additional or the initial rounds in Bitcoin terms. And so many of that, at that time, many angel investors or even funds will just look at that and be like, well, I could have had more Bitcoin had I not allocated to this. And so it doesn't necessarily make sense for me to double down here. It's just interesting to see more people either intuitively or naturally looking at Bitcoin as a hurdle rate, especially the angels.
Yeah, I mean, I'll say that probably some of the downtrend in investments has just been because we've kind of been in this like proxy bear market. Even though the price has risen, we don't know a lot of people stepping in to buy. This is more institutionally driven or sovereign driven. And so I think a lot of that percentage of investment really comes, or less investment comes from just the excitement and frothiness in the market. We haven't really seen a lot of net new Bitcoin companies as well and things that have commercial viability. It's always weird to me. And I don't really know why it is, because I think that there's like geo opportunities across the world when it comes to on-ramps and thinking about like in the like on-ramp from fiat to BTC in interesting ways. And then the other side of that, so I guess I'm taking the alternative take to what Liam shared, because I think angel only invests or only increases because you would look back and theoretically the opportunity size for somebody holding Bitcoin has been greater before, not now. Moving forward, it's less of an upside, but also the wealthier someone gets, that's the optionality, and that's where they either start to build a business or invest. And I think what excites me is as more investors holding Bitcoin are theoretically more sophisticated in my mind. And I don't mean because I think somebody that adopted Bitcoin in 2010 or 11, for better or worse, has a couple of screws loose, right? Because they saw it that early. And so alternatively, somebody that invests or is holding Bitcoin that, and this is kind of, again, our thesis on the stuff about people we hire and the people building, is somebody that has 10 plus years of professional experience in a certain domain and has certain expertise and then generates wealth by holding Bitcoin, will either be more likely to build a business and need less capital or just build it themselves. Because I think that's how we go, is to a flatter world, not a like centralized golden handcuffs, golden type world. But then also people will just be naturally more likely to spot opportunities that are less like moonshots and more commercially viable and deliver value, i.e. maybe the BitBonds idea, even though I don't really fully know how a commercial viability of BitBonds is, but it's Liam's transition.
Well, that too, before we transition there, it does make sense. And to your point, there haven't been a ton of commercially viable businesses that have been created today because everybody wants to build the product for themselves. Like, what is the gap in the market? And I know that this is something that I wish existed and could apply to me. And really early on, it was, complete cypherpunks who, were looking, what is the worst possible scenario that could happen? Always thinking about being extremely paranoid and making sure that there could be literally zero way that anybody could get your information or anything like that. And that's just not necessarily always how things can scale to the rest of the world. And so as newer people come in and they can see an area where, Bitcoin and financial services can compete with banks in a better way, they're just going to naturally outcompete them, especially when they have that experience at the banks or other financial institutions. So yeah, it's one the cohort of Bitcoin investors changing will inevitably cause the difference in Bitcoin businesses to change as well. But with that, on the Bic Bonds piece, it was interesting to see Pierre Rochard, not necessarily Bit Bonds exactly, but he's founding the Bitcoin Bond Company. His goal is to provide transparent financial products that help institutional investors access Bitcoin's long-term growth. It's not completely clear at this point what the product is going to look like. Based on what I can find online, he put a one-pager out there, and we'll be speaking with Pierre next week to learn a little bit more about what exactly the product looks like. But essentially, my understanding is that it will be an SPV. There will be lenders who can receive some nominal dollar yield, and there will be leveraged Bitcoin exposure. Pierre has been at the forefront of this essentially speculative attack for over a decade now, and that the whole thesis is, if there's a finite amount of some asset, Bitcoin, and an infinite amount of fiat or dollars, you should, hold the finite asset and go short the infinite asset in order to acquire more wealth over the long term. It'll be interesting to see how it plays out. I love the idea for the company. What do you guys think?
Yeah, I mean, because there's not a ton of info, I'll probably defer my thoughts until we have him on the show next week. It'll be great to do a deep dive with him. But on the surface, it seems like a very interesting idea. To your point, Liam, Pierre, I think, is primed and the perfect person to do something like this, because he's been talking about these dynamics for a decade, as you mentioned. And so very excited to see what he's cooking up. Also, just shout out, I do really appreciate and like their branding and aesthetic. Very clean, sort of TradFi-esque wealth core, if you will, which I'm a big fan of.
Yeah, I think something we talked about before is we don't plug in external pods. Maybe we can do it in the newsletters we have going out. But Pierre and Michael revamped the new podcast going back to their writings, and it's really fantastic.
Yeah,
it's something I've been meaning to. I don't know if we do a write-up and get people to listen, but I think it's really fantastic for individuals either that are coming into the space that want to go back to the first principles of why Bitcoin exists and what's wrong, and just the first principles of just economics. But then also just for somebody that's been around for a while and that you just need to go, either reinforce or go back to the basics. To your point on this one, we'd love to, it's going to be exciting to hear where Pierre's coming from. The thing that I'll call out that gets a little missed on institutional adoption for bonds or credit facilities is ultimately how they're positioned to the institutional investor. There's a lot of discussion around inserting Bitcoin in debt, specifically around real estate. And I don't necessarily, it's not that I'm not excited about it, because I do think middle to long term, Bitcoin helps in the deleveraging of this over leveraged system. But the kicker or the caveat is it helps deleveraging for productive debt, not unproductive debt. And a cousin of that is going to institutional investors and saying, hey, I'm going to take some of your capital and buy Bitcoin and dollars. And the idea generally is from an institutional perspective as well, you can reduce the volatility. But the idea is if you can reduce volatility, well, you can just buy less Bitcoin. And the other side of it is most people need to get over the Bitcoin hump. So even if it's a small amount and it's wrapped in a sexier wrapper, it's still very hard for them to make that leap. And the best way I can describe it, and this might sound hyperbolic, but it really isn't. It's like you're selling a steak and then that you sprinkled some poison on it, because that's how they look at Bitcoin. It's like, man, I still think it's poison. I see it as a risky asset. So you're giving me this stake, this capital, and then you're going to sprinkle a little on. I'm not saying for this. I'm just saying in general, going to institutional capital and explaining, oh, I have a better version of Bitcoin. You still have to sell them on Bitcoin. And then if you get them there, they're like, well, why don't I just buy spot Bitcoin and then reduce that? And then because you're layering on assumptions as well, which everyone knows if you're investing, you want to reduce the amount of assumptions. So you need Bitcoin to work. You need the execution of the bond. And then if you're investing the capital, I'm curious where the capital is getting invested. Is it the private market via operating businesses, or is it going to be just in the treasury market? So again, it's just a lot of, it's like everything here. It's all about execution and it goes back to what we were talking about a second ago with, are people building things for themselves or the market?
it breaks down, it comes back to taste, which is 101, for thousands of years. It's like, do you have a taste for what the market wants? And then can you get it there? And so the branding, to Brian's point, there's a nice taste there. And then it's just about the execution and how do you not only raise the capital, but then create the structured products that are appealing for the market. And so it'll be fun to dive into that with people.
Yeah, it's a really interesting point on the the dollar capital and the persona of that that capital, and sort of what I think you're referencing, Michael, is like there's sort of two ends of the spectrum. Like, you fully understand Bitcoin, so then you would just buy Bitcoin, or you don't, you think it's poison, and so like you kind of don't understand the value prop of having a lower vol poison. And I think what this company and others like it are going after is like the cohort in the middle, who like is curious enough, but still either via some portion of their mandate that has like volatility stipulations in it. There's some reason why they basically want like a watered down version of Bitcoin exposure. And there clearly is demand. That cohort clearly exists if you just look at like MicroStrategy's bonds and how well they've performed and also been oversubscribed historically. So clearly that demand exists. It's just like, I think you're totally right in that it is sort of a unique persona in that you don't fully understand Bitcoin, because then you would probably just buy Bitcoin, but you're not fully against it because then the idea doesn't really make sense to you. So it's someone in the middle there, which, go ahead.
There is also, think about like the Larry Finks of the world, but are like fully Bitcoin maximalists. Like, you can be running a credit hedge fund and allocate to credit products and be doing that for 40, 30 years, and then just find Bitcoin on your journey. And you still manage capital on behalf of other people, but you understand why Bitcoin is the best asset in the world and still have to, for your day job, allocate to credit products. That's why this product could potentially make sense for those people who have a lot of capital. They have a specific mandate, but they understand Bitcoin deeply. And this one is kind of interesting to your point, Michael, because it's not Bitcoin plus and credit plus real estate and equity or whatever. It's just a pure play on Bitcoin.
Yeah, I think so. I think and then it goes back to market timing, right? Because what Brian was sharing, there's a liquidity profile that MSTR provides, which is like the downside protection coupled with the convert, coupled with access to the equity. There's a lot of there that like we see the capital being absorbed, and it's how many companies can do that strategy and how much money catches up to want more of it. And then does it accrue like a Pareto distributed to the top companies doing that, i.e. like Metaplanet? And then to your point, there's some level below that, which is something like this in what segment of the market. But yeah, because there's so much money and there's so much negative yielding money that there definitely has to be it there. It's just figuring out, and then how do you pull again the whole thing together? So yeah. Hey guys, hope you're enjoying the show. Just want to send you a quick note. And while you may know of multi-institution custody and the best-in-class services around that, a lot of clients and prospective clients generally ask us or don't necessarily know of the other financial services we provide. At the end of the day, Onramp's aim is to be your trusted guide in crafting multi-generational wealth. Our clients not only get access to multi-institution custody, Lloyd's of London insurance, lending, trading, inheritance, and also independent or individual retirement accounts. Now, along with that, a lot of our clients end up opting for a private client tier, which ultimately allows them to get a dedicated client solutions manager who provides an additional white glove handhold onboarding, and which is from industry experts. Our team comes from the largest firms in the space, and we've onboarded billions of dollars and thousands of clients. And you're going to really appreciate some of that expertise, whether it's for yourself or family, in a trusted way to help with onboarding, to movement of funds. If you're on a collaborative custody provider and need help uploading wallet configuration files, plugging in the devices. If your backup or your device firmware is out, we'll help you with the seed phrase uploading to get that signature taken care of and assets moved over. Now, along with our private client tier, clients get access to tax, inheritance, and advisory support, and then also access to private equity investments in the Bitcoin ecosystem via our relationships with Early Riders, the venture capital firm operating with Bitcoin as our hurdle rate. At the end of the day, we blend timeless prudence with the tools of tomorrow and partner in turning clients' dreams into lasting legacies. reach out to us today and we'd love to talk with you. You can shoot me an email at michael@onrampbitcoin.com. You can shoot the team an email at hello@onrampbitcoin.com, or you can go to our website and book a consultation, and we'll speak with you soon. I hope you enjoy the rest of the episode.
Yeah. And then one last one that we can touch on today. Meanwhile, they are proud to announce $40 million Series A led by High Framework and Fulger Ventures with participation by a couple other parties. This is for those who are unfamiliar. They offer Bitcoin-denominated life insurance and annuities. It's a cool idea. I haven't used the product myself, but it's interesting and good to see funding for other Bitcoin-focused ventures. And I like that there are more companies offering Bitcoin exposure or Bitcoin denomination for everything that there is, not just necessarily buy, sell Bitcoin on and off ramps. And it's getting ingrained deeper into the everyday life of, what people like us would like to have. Wanted to get your thoughts on the raise and meanwhile, if you've spent any time there.
I mean, personally, I think that and Brian's talked a lot about this. It's something that I think over time we'll focus more on the fund side is like this notion of permanent capital. And there's a lot of dollars sitting around idle. And as long as the thesis is right, that Bitcoin goes up and to the right, then infusing that in those structures will deem a positive return. One of them that I think could probably do it a little better, even though I'm not as familiar today, what was in the past is like crowd health. So there's something to like parking those dollars, but maybe the majority of it is in BTC. You have to get alignment right from the consumer. But I like plays like that. The Meanwhile one's interesting. I don't know enough of insurance just gets so murky and convoluted. And so don't have a deep understanding there. What I do know is that at least historically, the last time I had looked, they offer some kind of like risk-free rate of return on yield. They have to produce like 3% based on whatever they're pitching to the market. And there's no real understanding or explanation on how they get that yield generation, BTC yield. And everyone knows if you're not, if you don't know where the yield comes from, then it's generally from you. And so that's the thing that I think is worth bringing up, that a lot of these products, you want static permanent capital that has an understanding of like what the return profile is and how far somebody's going on the risk curve. And it's not really explained. And I don't think it can be explained because there's not really a risk-free rate of return and yield in Bitcoin. It's holding the Bitcoin and not touching it. So that's, I think, just something worth calling out. Maybe we'll have to do a deep dive or get them on the pod to walk through that.
Yeah, it's a good call. I candidly don't know enough about it, but that's interesting around the yield component. But to your first point, broadly speaking, I do align with this thesis of basically like finding these pools of idle dollars. So, the insurance world would historically be one, health insurance as well. The example I always like to give is the funeral homes, which basically like if you need like a plot for your grave and to set up a funeral, like you do that like sometimes a decade plus in advance, where you're putting down a deposit of some amount and it's just sitting in dollars. And so it's like that concept of like, if there's just these pools of idle dollars around and you can infuse Bitcoin into whatever that structure is, it's better for all parties, right? The funeral home wins, the person who's putting the deposit down wins. And so that I think is an extension. This is kind of an extension of that thesis that I've had for a while, is like, we just need to identify where all these idle dollars sit and infuse Bitcoin in various ways.
Brian's already bought the plot for all the shit coins out there too. All right. Anything else we want to hit on today before wrapping up?
Need to figure out a closing segment or like rapid fire. I don't know if it's business ideas. It could be harebrained or if there's bullish bearish, but there's something here that
there's this tweet this morning, which I thought was worth pulling up. I think AP Abacus, I think he called GameStop a few weeks ago, and now he's calling 2 new corporate entrants are coming. So, the guesses in the comments are Dell and somebody else. There's been murmurs around eBay as well. But any thoughts from the group on who the next corporate ICOs?
I think it's probably somebody international who's coming next that is dealing with something tariff related. I think that there's a lot going on with allocators finally understanding who the true counterparty risk is. There's in a system based on trust. There's trust being eroded pretty rapidly. I don't know exactly. I'm not going to be able to speculate who exactly this is. People have speculated Facebook and Meta for a long time. I know he's got like a llama named Bitcoin or Max or something for like Maxi but it's anybody's guess.
Yeah, but you hit on a good point there in that the eroding trust is a broader theme, and it's not just corporates, it's nation states, and it's really, make what you will of all this tariff trade war stuff. If you zoom out, what is really happening, it's basically a move away from globalization towards a more multipolar world, and the knock-on effect of that is inherently less trust, right? And so you need some other asset that you don't have to trust an issuer. It needs to be credibly neutral. It would be great if it was also digital. And so that's why Bitcoin is really perfect and primed for this moment, from the corporate, nation state, individual level, all across the board. In a world with eroding trust, you need this credibly neutral asset.
Yeah, it's going to be fun to see like the first company that really, you would think it'd be Square, but it doesn't feel like it for a number of reasons, that really just like embodies the Bitcoin strategy like across the board. So from capital preservation instead of stock buybacks, right? Because stock buybacks have certain value, but then ultimately one of the negatives is you're reducing optionality in the future because you're expending the capital that you made today. And you think from that, so holding a treasury to leveraging the network for like whether it's cross border, and it can be stables coupled with BTC, different integrations, but then ultimately like passing through, because you theoretically, like I guess holding Bitcoin, being a Bitcoin treasury firm has shown positive from the public traded side, but then also being able to, if you're super cash flow positive, and then you can pass back some of those dividends to the shareholders. Like there's something interesting there for like somebody that fully understands why it's just like the best form of capital preservation from a full stack, from the treasury all the way through like corporate finance and how they manage.
Honestly, it should have been Coinbase if Balaji had never joined.
It's funny. It's funny you say that, because this came up last week. Somebody deeply respect executive in the industry, traditional industry, breaking into the space, and he referenced how like be careful of Coinbase, right? Like they're on. It's like, are they really? Because you look at like the signal is they've been involved in the space since 13 or wherever, and they held, and I know this is an exact number, but they held like 4 Bitcoin going into their IPO. It's like, that's the signal. It's like they missed the whole boat. So how could they, to your point, Brian, it's should have built that vertical integration to do that. And yeah, they didn't. So, and it's sad because we may not see that company. They'll just end up private, because any Bitcoin person would rather just,
that's true.
If they're printing, they would become private, especially if there's all this like tokenization stuff. You're going to be able to sell private placements a lot easier, bring more liquidity to that market.
Yeah, with public markets, we're just seeing that there's more pressure to, add more coins in order to monetize faster, even if it is necessarily damaging to your brand over the long term.
Yeah, it's the same. It's the Bitcoin crypto thing on a personal side all the way to the business side. It's like you're delaying a little bit of gratification for long term winning, and also just being able to like look people in the eye and not have scammed them. And so there's just a reality of the incentives haven't been there. But it's bullish that as Bitcoin gets more of that divergence from crypto, more capital comes in, more capital is going to require it. We'll see more people take a stand on not putting, Solana on their balance sheet or supporting other crypto.
All right, boys. Should we wrap it there?
It's a good way to go full circle from starting with crypto to ending with it's all noise.
A lot of noise. We're here to sift through it for you and find the signal. Thanks everybody for joining. See you in a couple weeks. Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.